As of this week, we are officially having a stock market correction. This is the first market correction since August 2011. Some people say it's past due, while others say corrections are less frequent during bull market rallies like the one we're in the middle of right now. The recent decline in our equities market has been primarily driven by China. Chinese economy has been growing at a growth rate of over 10% per year for the past several decades. This has made their investment community accustomed to high returns and less focused on the fundamentals of the economy. Now that the Chinese economy's growth rate is slowing to below 7% per year, it's exposing some of the gaps and the reckless behavior that has been going on in China. China has debt concerns, like most of the developing world, but has been able to overlook them because of their high growth rates in the past, which they could have arguably overcome their debt burdens by simply outgrowing it. You can also look at the Chinese stock market and see that they've had over a 150% increase in value in the 12 months preceding June of this year. Over the last several months, China has been scaling down expectations with the latest action of their lowering of their currency's exchange rate. With that slowdown, their stock market is down 40% from its highs in June. Bad news in China has a rippling effect throughout the rest of the world's economies. Since China is the largest consumer of commodities, there is downward pressure on commodity prices from Chinese slowdown. This also is compounded by the already low oil prices. Adding these economic troubles with the troubles out of Greece a month ago is also driving the correction in our economy today. Now let's look at our economy for a minute. Yes, we have seen losses in most people's investments over the past several months, but these losses are driven primarily by external forces in China and Europe, and are not being caused by an underlying problem in our economy. Because of this, I feel we're seeing only a correction and not the beginning of a stock market crash. This is not to say the market won't drop more before moving in the right direction, but it does put us in a good buying position right now. Many of the portfolios I work with have been building up cash just for this situation. They're starting to deploy that extra cash into undervalued companies in the market. We should see the remainder of this year as a positive, and for those of you with extra cash, you may want to consider investing some extra cash while the prices are still low. If you have specific questions about your investments, please don't hesitate to call. That's what I'm here for. We can discuss how all this fits into your overall plan and what steps, if any, are best for you to take right now. Thank you.